Hello, everyone. Happy Wellness Wednesday. Apologies for the technical difficulties. Like this quality is not great, and I highly apologize for that. Hmm. Not sure exactly how to fix it, but nevertheless, I want to wish you a happy Wellness Wednesday. And if you are joining me for the first time, I am Mia James. I'm your financial wellness coach and your favorite financial concierge. And I want to wish you again a happy Wellness Wednesday. Welcome to All Things Feminine Finance. And I want this to be a place where we can talk about all things finance. So let me know where you're joining from. And again, I apologize for the quality. Hey, Natasha, that's my sister. How are you doing tonight? Tonight, we're going to be talking about all things credit. So I have a lot of things to share with you all this evening. And I'm going to jump right in because we are running a little bit behind schedule. So, first and foremost, you know, credit, right? Like we all hear about this thing, credit, credit cards, credit so that you can purchase homes and things of that nature. But I really want to break down the financial health of credit. And why is this important in the world of feminine finance? So, of course, with feminine finance, we make decisions from our heart, and there's many things that our hearts desire. And a lot of those things, some of those things, I should say, may require us to use credit. So let's talk about what exactly credit is and why does it matter. So, for example, credit is your ability to borrow money or access goods and services with a mindset and understanding that you'll pay for them later. So, lenders such as banks or credit card companies evaluate your credit worthiness based on your credit history, which includes factors like payment history, outstanding debt, and the length of your credit history. So, some of us have a long relationship with credit, some of us may have a newer history with credit, or maybe you're rebuilding your credit. And so, with this being said, a poor credit score can limit your options and lead to higher interest rates or even denials. Building and maintaining good credit is therefore essential for long term financial health, access, and opportunities. So, I like to look at credit. I think credit is a good thing, personally. I like to look at it as someone entrusting me with money that is not necessarily mine. Like I don't necessarily own it, but it's giving me this access and this opportunity. So these are 5 reasons that credit is important. First and foremost, it gives you access to loans. So let's just say that you want to buy a home and it costs $500,000. Well, many people are not going to just save up $500,000 and then purchase. They're going to get a loan so they can get into the home faster and pay it off. Also, people get car loans or they use loans for education. Number two, it gives you lower interest rates. So, having a strong credit history will allow you to qualify for lower interest rates, and this helps save you money on loans and credit. So, this is the key right here, y'all. I would say that if anything, that's one of the biggest takeaways I have for credit is that it helps to lower the cost of borrowing. Okay. So definitely that's something to keep in mind. Also, rental applications. If you are renting, your landlord is often going to check your credit score to see if they want to either rent to you or determine if you'll need to pay additional money for a deposit. The next thing is insurance premiums. Believe it or not, insurance companies use credit scores to determine your premiums and if they're going to increase or decrease. That's something a lot of people don't know. So credit impacts a lot of things. And last but not least, number 5, employment opportunities. So some employers actually check your credit report in the hiring process, especially if you are in, certain fields, like the financial field, for example. So just to level set, oh, I'm doing pretty good today, Natasha. Just running around New York City and yeah, it's just been a day, it's been a good day, but literally a day of running around. So let's jump in. So, what is our credit score made up of? So, if you're watching this on replay, definitely If you know someone who has been talking about purchasing a home or purchasing a new car, anything like that, or just rebuilding credit, definitely share this episode with them. Primarily the audio part, I guess, because I don't know what is going on with the quality here, and I do apologize for that. So, what makes up a credit score? So, in the chat, if you let me know if you already know this ratio here. How many let me know. How about you, Natasha? Do you know the percentage breakdown of the credit score? Hey Jen, yay. Yes, Natasha, they absolutely do check credit for everything. Like, you will be surprised the things that they actually check your credit for. And then how about you, Jen? With the credit score breakdown. I always like to ask first because, if y'all already know, then okay. So 30%. Okay. So you're talking about credit utilization. Very good, Jen. Awesome. Okay, so I'm going to break that down for you really quickly of what the pie is in terms of your credit score. So 35% of your credit score has to do with your payment history. So making sure that you pay on time, that's super duper important because that is the biggest percentage of your credit score is your payment history over time. 30% amount owed. So that's what Jim was alluding to. Really, the standard that's kind of understood is that you don't want to utilize more than 30% of your credit limit on your cards, right? So, if you have $100,000 credit limit, then ideally you want to only owe 30,000 or less. The next part is 15% is the length of credit history. Okay, so how long you've had a particular type of credit. And of course, there's different credits, which I'm going to talk about in a minute. So 10% of the score is credit mix. So, there is revolving credit, there's there's the credit, like your credit cards, loans, things of that nature. So a different mix of different types of credit. And then 10% is new. So newer type of credit. So, when you go, let's say you want to purchase a car, they're going to pull your credit, right? So if you get a new car loan, that'll be added and that'll be a new form of credit. And disclaimer, I am not a credit expert, but I do understand it enough to kind of share some of these tidbits because it is important in anything that we do in finance. Let me see, always 30%, 35%. Are you talking about the payment history, Natasha? I just want to make sure I answer the question properly. I want to say it probably used to be around 30 from what I remember in the past, but it was somewhere in that range, 30 to 35%. So great question. Thanks for asking the question. I love it. And I'm just going to share, actually, let me see if I can actually share my screen with y'all. Let's see if that works. Okay, let's see. So we're going to try to share a screen. Present. Let's see. And share screen. Okay. Yes. Okay. I think it's going to work. So we're going to share. All right. It's working. Slide show. Okay. So I don't want to start from the beginning. All right. So give me a minute. It's not going to allow me to be great, but that's okay. We'll get there. Okay. So this slide actually shows how much a credit score impacts your cost. So basically, these are the ranges of your FICO score. So these are your credit ranges, right? So 800 to 850, you have great credit. that means that you will have the lowest interest rates, right? So that means you pay less to borrow. Then 740, 799 is very good. 670 to 739 is good. 580 to 669 is fair. And 300 to 579 is poor. So if you have someone, or say for yourself, you have good to excellent credit between 740 and 850. If you're trying to get a home loan, it'll probably be somewhere around 6.867%. So in the example, let's go back. Oh, it's not there anymore. Okay. So I'm not sure. I would need to see this. I'm not sure exactly why it says 221 560, but we'll keep on going. So if you have good credit somewhere between 670 and 739, your interest rate will go up to about 7.311%. So interest is 360,909. And here, as you can see, if the interest on that home was with very good to excellent credit is 221, but even if you are slightly lower, there's a big difference between the 360 and 221. So as you can see, it actually costs you a great deal of money when you have a lower credit score. So the point here is really you want your credit score to be the actual highest that it can possibly be. So let's see. Let me check the chat. Hey, Andrea. Oh, thank you, Jen. Appreciate it. Awesome. Welcome in, everyone. Okay, so going back. So here's a couple key things that you can use to boost your credit score. Okay. Oh, but I do want to give you some other little tidbits about credit. Experian is the credit bureau that many financial institutions use. So you can actually, I have a free account through Experian. I don't know if it's still free because I've had it for years, but definitely check out Experian to see if you could get a free account through them. And that way you can see what credit score will be going out to the most financial institutions. So there's 3 different reporting bureaus, credit bureaus, I should say. And so financial institutions can actually pull from all 3. And a lot of times, like I know when I was purchasing my home, they take the lowest of the 3 scores. So it's also important for you to kind of know what your scores are across all 3 reporting agencies. Okay. Now, if you're a business owner and you're looking to get a business loan and use your personal credit, you want to have a 650 to 670 and above. Really 670 and above if you want to get some business credit. All right. So those are some key things that I've learned, kind of going through my own personal journey. So here's some things you can do to boost your credit score. Obviously, you want to pay your bills on time because payment history is 35% of your score. Late payments actually stay on your credit report for 7 years. And one missed payment can drop your score up to 100 points. Okay. Also, going back to the credit utilization score, you want to make sure you, again, do your best to stay under 30% of your total credit limit. Now, this is a very interesting statistic. Co-signers, y'all, co-signers are held liable for 38% of delinquent loans. So if you ever co-sign on something, which the Bible tells you not to do, I'm laughing because I was trying to help a family member. Y'all, if I went on and on about all of the financial mistakes that I made, this is why I talk about this, because I don't want people to do the same thing. But basically, if that person defaults, then you're on the hook for that. So, and it impacts your credit as well. So just be aware of that. Anything above 30% utilization is considered high. Okay. And Susie Orman, who I used to be like a Susie Orman fanatic, she recommends keeping your credit utilization at under 10%. Okay, just for safety. The next thing is don't close old accounts. Okay, like that, because that impacts your credit history. So do not close them. Yep. Oh, okay. Let me come back to the chat. Oh, that's a lot going on in this good chat over here, y'all. Meanwhile, I'm over here looking at my little notes to make sure I tell you all the goodies that I've been learning. Okay. Yeah, see, okay, so thank you, Andrea. Yes, I've decided to do something different, y'all. I got my hair curled instead of straightened for once. And I wish I could actually see it without all the graininess in it. So yeah, it's like I'm just very pleased with how healthy my hair is. I have a wonderful stylist, so thank you so much. But back to the question at hand, right? So Jen says she uses the free account. Natasha uses the free experience account. Yes, they absolutely do have a paid version. Okay. Ooh, now Natasha, yes, this is a good. Okay, Natasha is gonna do a deep dive on her credit system because she likes to do these deep dives. So Natasha, one day I'm gonna have you on as a special guest so you can share with us what you learned. Okay. And yes, Jen, the Bible and mama said not to co-sign. My mama told me and the Bible told me, and I still did it anyway because I wanted to help a family member. So yes, and I be on them all the time, like, hey, you gonna pay that thing off? Hurry up, hurry up. Okay. Yes, and I'm with you, Natasha. I like free too. Free 99 is my friend. So okay, so Pixie Chicks, this is what I'll tell you. So a lot of times, they blast out the non-free version, right? Um, a lot of times there's a little X or something like kind of faint that you can't see, and it'll allow you to bypass. Now, again, I'm not sure, because a lot of things have changed, but I would definitely see if you could get the free version still. Um, and what else? Oh, you can definitely get a free credit report every year. So definitely do that, y'all. This is a kind of a caveat, and I'm gonna get back to what I was saying. But go to freecreditreport.com. You can get a free credit report every year. And also, if you bank with American Express or with Bank of America, they actually give you a FICO score for free. So I can check mine every month or whenever I want. So yes, this is great. Thanks, Jen. So you just have to say keep your free membership often. And if you're just joining in, we're talking about the Experian account to track your credit score. All right. Thank you for that. Yes, Natasha, we definitely have all made mistakes, okay, with especially when it comes to credit because you don't really know. Like, I don't know about you all. So when I got to college, right? And then I'm gonna get back to this, but I like to interject a story because this is real life. This is how we learn, right? We learn hopefully we learn from our mistakes because sometimes we don't. But basically, you get on campus, right? And what they want to do, Jen, you know this because you've been on Bruin Walk, okay? So on Bruin Walk, so Jen knows, they set up all these tables, all the credit cards, right, for all the gullible college kids, and then they have all that free college swag that that is so expensive in the student store. And then you're like, yes, Jen, thank you. They got me too, girl. They got me too. I was like, oh, I can get a free water bottle. Yes, let me sign up for this. Oh, I can get this free shirt that costs $40 in the bookstore. Yes, let me get that free t-shirt. So absolutely, absolutely, they get us right when we're young, when we don't really know what we're getting into. And like I said, I am a proponent of credit, but my recommendation is that if you do have credit and you use a credit card, pay it off in full every month. If you can't pay it off in full, don't do it. Well, I mean, there's extenuating circumstances, right? But that's my goal. I mean, that's my biggest thing that I try to do for sure. Let's see, knock knock, give me my money. This is great, y'all. This chat is live. If you're watching the replay, you really need to come live because you really need to get in the chat. That's where the fun is really at. If you missed the chat, like you really missed the whole thing. Yes, the free line of credit. Wait, the gift boxes at FSU. I love it. Oh my gosh, they gave a box. That is clutch. Okay, we didn't get that fancy stuff, Natasha. They were like, nah, you're not getting no box. I love it. Okay, so yes, come live, y'all, because the chat is where it's at. Okay, so let me get back to boosting the credit score. Okay, so keep old accounts active, even if you have like one little subscription or something, like a $15 subscription on it, and you just pay it off every month. Just keep it active. The next thing is diversifying your credit mix. Now, I don't want you to just be opening random accounts or anything like that, which I know y'all want because y'all all are responsible. I know you all. But just in case I don't know you, please do not open unnecessary accounts, but as needed, diversify your credit mix, and then limit new credit inquiries. Okay. So only, like if you are shopping for a home, for example, or a car, try to keep the inquiries within the same time period, a 14 to 45 day time period. And so basically what I do, like when I was shopping my refi for my house, I basically contacted all of these lenders and mortgage brokers, and I had them all run me all at the same time because I was like, yeah, I know it's going to hit, so it's okay. So in order to build credit, if you are in the repair stage, one thing you can do is open a secured credit card. And I'm going to post a link in the chat. And this is a link where you can get some more information on secured credit cards. No, I can't, Jen. I didn't have enough time to set that all up. The other thing to build credit is paying your bills on time every time. So I like to do automation that helps with that. That way it's like out of sight, out of mind. Keeping your credit card balances low, using a mix of credit types responsibly, and monitoring your credit report regularly. Now, this is important because sometimes there's things on your credit report that shouldn't be there. So like I mentioned earlier, if you go to freecreditreport.com, you can get your free annual report. And I highly recommend that. If you haven't done so already, just go ahead and just download it and check it out and make sure everything that's on there is actually legit. So my call to action for you all tonight is number one, review your credit score for any errors. Set a credit goal if you haven't set one, like maybe you have fair credit or good credit, but maybe you want to get the great credit. So set a goal if that's something that you want to do, if you want to use your credit anytime here soon. If you haven't, create a plan to pay down credit card debt. Also review your progress every month, and then commit to one new credit habit this week. So one thing that I also have resources for if you need is credit repair. Like if you need to get disputes off of your credit, then definitely reach out to me and let me know, and I can provide you with the DIY resource or a do it for you resource. That's definitely something I can do. Yes, Jen, can test everything. Make sure that credit report is accurate. That is important. Okay. If you see something, say something, like they say in the subway. If you see something, say something. Anyway, y'all know I think finance is fun. Okay. Yes. Excellent. Very good, Jen. Jen tracks her credit each month. That's what I like to hear. Ooh, great question, Natasha. So what if you are starting over and have to rebuild your credit? With these methods work? Absolutely. So with rebuilding, all those methods that I just mentioned, secured credit, paying your bills on time. If you do still have your credit card, keep those balances low and paying them off every month. And, I don't, like I said, don't open anything unnecessary, but if you can diversify your mix of credit. But the main things, like the two things that count the most, is paying your bills on time and keeping your utilization low. And checking your credit report to see if there's anything on there that's not supposed to be there, so you can get any, derogatory marks off. And so again, if you need some assistance with that, I have some DIY or do it for you resources that I can share with you. And yes, Jen, come on, 800. I'm trying to get there too. I'm trying to get back to 800 like I used to be. I used to be like, I used to have a perfect credit score. And then well, I'm not going to say that, but things happen. Life's, right? Yes, you are most welcome, Natasha. So that is everything for me. I know some of us are going to head on over to book club with Dr. Boyce, and we are reading this book in case you want to join us with Dr. Boyce. Let's see if you can see it. The 10 Commandments of Black Economic Power. Come and join us. We'll join Dr. Boyce. He reads through his book. It's an amazing book so far. Really, I like being read to. It reminds me of being a kid, and I like how he give the dialogue. So before we go, any questions? Thank you, Jen. So Jen says, carry healthy credit to build your credit. Yes, healthy credit. So really, my actual thought is that if you're going to use credit, it should be helping you make money, right? Is it, are you investing in something that's going to help you make money? Now, I use credit to get points, right? Because I travel the world. But we go ahead and pay that off. So but just whatever you do it responsibly is what I will say. But again, if I can be a resource to you, then let me know. So Andrea, I will text you the link as soon as I end. All right, so you can join us for book club. All right, everyone, I'll see you next week. Thank you for coming. You all warm my heart every week, and I appreciate you. And I will see you next week, same time, same place. We'll be talking about the wealth formula next week. All right. My pleasure. Thanks, Natasha. Thanks, Jen. And thanks, Andrea. See you next time. Bye.